Hi friends, today we are going to learn about capital and revenue receipts. What is a receipt? A business receipt is an inflow of economic resources, again mostly in the form of cash and cash equivalents. So it is on account of various activities during the normal course of business operations. Now how do we classify these business receipts? These business receipts are broadly classified into two categories: capital receipts and revenue receipts. Now you can see from the image of capital receipts given. What is a capital receipt? Basically, the examples of capital receipts are amount received from sale of fixed assets or non-current assets or from long-term borrowings. So basically, this is a long-term commitment. It is received for long-term. It creates a long-term liability, or it is from the sale of fixed assets or investment. So it decreases fixed assets. When we borrow a loan, it is basically for financing activity and it is non-recurring in nature. So what is happening in this case? In case of capital receipts, it is not that we receive it daily, as borrowing a loan or selling a fixed asset is occasional, it is non-recurring and it is a financing activity. So these are examples of capital receipts. Now what is revenue receipt? Revenue receipt is recurring in nature. Now revenue receipts, we can see the red box which is created on the image towards the left hand side is showing the examples of revenue receipts. What are the revenue receipts? As the name suggests, it is generated from regular revenue, regular business operation. It is recurring in nature. Basically, it is found on credit side of profit and loss account and trading account. In trading account, when we write by sales, sales is nothing else but revenue received. Similarly, if we have received rent, or we may have recovered bad debts or dividend received, commission received, all these are, or for that example, income tax refund are also examples of revenue receipt. It is recurring in nature, generally for short term, that is for that particular accounting period only. It is shown on the credit side of trading and profit and loss account, so it increases profit, and both operating and non-operating income are included in revenue receipt. Now if we want to find the difference between revenue receipts and capital receipts, so capital receipts are generally from financing activity, okay, whereas revenue receipt is from operating activities. Capital receipts are non-recurring, whereas revenue receipts are recurring. Capital receipts are long-term in nature, as loan, when we borrow, it is to be repaid in 5 years, 10 years. Even debentures, when they are issued, the use will be for long-term. Whereas revenue receipt, for example, rent received or the sales which we incur, are short-term in nature. Now, capital receipts are shown in the balance sheet in the form of liability, or it decreases your fixed assets. Revenue receipts are recorded on income statement, shown as source of income. Now, because of capital receipt, as I explained earlier, either it increases your liability or decreases value of fixed asset. But in case of revenue receipt, it increases or decreases the value of assets or liability. It doesn't increase or decrease value of asset or liability. In fact, it improves your profitability. I hope you would be able to classify capital and revenue receipt. Thank you.